Hey everybody, happy Sunday. Hello Team UK, a lot of British in the chat, and there's a very British specific question this week too. So it looks like the English folks are very, how do I say, the squeaky wheel gets the oil, I think is the old expression. But let's jump in, a lot of ground to cover, and I hope everybody's doing just fantastic. So today's video, really, we look at all the top questions that come from the community over the last week. And it'll take us in many different directions. We're going to talk about macro, we're going to talk about crypto, we're going to talk about how they hit together, hedging, stocks, especially my favorite one, and where we're going to go next. And everybody's asking the right questions. So let's just jump in. And of course, none of this is ever financial advice. It's only edutainment. I should create a song. I think there was an old British song called That's Entertainment back in the day. But anyway, enough about music for now. Let's go to the first question. Blue Tiger. With its lower relative inflation, growing scarcity, and steady DeFi volume, isn't ETH becoming a better store of value over Bitcoin? Brilliant question. And everybody's talking about, oh, well, the new merge. Is it a new asset? How much will it yield, etc.? So let's talk about some of the elements of Ethereum as a store of value. First of all, one of the tiny concerns, you can see the total supply is 122 million, and there's no max supply. So we don't know where that's going to go over time. And as we move to proof of stake, people can maybe increase the amount of supply that's there. And the big question is it going to be deflationary? And that's the question we always ask. So when it came to 1559 last year, it did not live up to expectations. We only had 7 deflationary days over the past, 15 months, I think, since the IP 1559 launched. I can't remember exactly at this stage, but that was disappointing. People thought it would be deflationary. Now, when we compare this to Bitcoin as a store of value, I still believe Bitcoin is the hardest asset on earth, and its supply is utterly predictable. Ethereum supply, max supply, not necessarily. Here you see the max supply for Bitcoin, 21 million. All of those will not be mined until the year 2140. In fact, I think it takes something like 40 years to mine the last Bitcoin or something crazy like that. So that's an indication of where, if the laws of supply and demand work, we'll talk more about those as well later, then we know the price of Bitcoin is going to go up. So the question is, what's harder? So there are a couple of things. It's kind of a weird question. So when we go to Bitcoin, again, not only is it hard and the supply is dictated, but also I believe it's deflationary because people lose their coins. People go swimming, lose their keys, forget their seeds, transfer to an empty hole, yada, yada, yada. So as you all know, if you listen to this channel, we believe there'll never be more than, at this stage, about 13.8 million Bitcoin available because of Mths Ago, Satoshi lockup, additional lost coins to date, etc. Again, that's slightly out of date, but it should be pretty much correct. Again, 14 million is the max amount of Bitcoin that'll ever exist. So it is super hard. Now, why I hold ETH? And this goes back to your question. So I do believe it's worth holding for the following reasons. One, ETH staking could offer a 10 to 15% yield. I'll believe the 15% when I see it. I think it'll be more like 5.5 to 7. But we'll see. A lot of people are talking about 10 to 15% yield annually for stakeholders. Second, it is an enticing bond alternative for institutional investors. So for the first time ever, we could get a lot of institutional money. People that historically invested in things like gold and bonds could come into this space. And this would be a huge money flow. Ethereum also powers DeFi. And also there's no regulatory risk, as we heard from Gary Gensler for the umpteenth time last week. There's also no ESG FUD because of moving to proof of stake and will burn no energy or very little. And finally, the reduced ETH issuance and increased burns will systematically reduce Ethereum supply. So nothing but goodness on that front. And therefore, I think, yes, it could be definitely an interesting store of value, but there's only one Bitcoin. And remember as well, I always talk about the murderer's row of layer ones that are going to go after Ethereum. It does have a huge target on its back, and it has been targeted by some of our favorite alts. We'll talk more about altcoins as well. Interesting question, so thank you for that. Next question is from Rock Dogs. How will the crypto market evolve when the day comes when all the Bitcoin is bought up? Now, we get this question a lot, and it still perplexes people, so we'll answer it again. But people are always worried, what happens when there's only 2.3 million Bitcoin exchanges? If they get all bought up by by BlackRock, what happens? Well, the price will go crazy. And that's the time I'm waiting for. And that's why I say the future is bright, because no matter what happens, it's just a question of time before it does go ballistic. How ballistic? We'll see. But supply and demand equilibrium, you'll see here, the short answer, nope, not a concern. The long answer, if there isn't enough supply to meet demand, then the price will go up until people start breaking down and saying, whoa, $500,000 a coin? I'll offload one for that, or part of one, and I'll buy a house, or I'll buy a boat, or I'll buy a holiday villa in Spain, or whatever else. This means there will be always supply to meet demand, or else the price will keep on going up until these sellers break down and reach equilibrium. This is why I love Bitcoin. And these sellers can include miners who have to pay for electricity. And in order to pay for electricity, they have to sell a portion of their mined Bitcoin to pay for it, or issue stock, etc. But normally they sell Bitcoin. And if the supply gets to a certain point, holders will start to sell. And the Bitcoin hodl always has a price. No matter what you are selling, there's always a buyer and there's always a price at which somebody will sell at. Okay, in everything in life. So any supply shocks in Bitcoin will always be met by long-term holders taking profit. Hence, all of the supply of Bitcoin being bought up is not a concern. The price will simply keep on going up until people start to capitulate and sell into it. So again, exciting times ahead. And I know a lot of you are impatient. We've been through a really nasty storm, but things are still, holding up, and we are coming out the other side real soon. So next question is, do you have a list? Let me blow this up. From Tunas on Toast. Do you have a list of exchanges that you still trust to put your crypto in to store, stake, and earn? Yeah, well, we did a very, very thorough exchange analysis. We surveyed thousands of community members around their experience and sentiment and feeling. And this is a quick summary of the detailed study. Over 1,000 crypto users in the community. They gave us their first-hand experiences on some of the most popular exchanges. We covered trading fees, transaction fees, spreads, yield, security, trustworthiness, platform reliability, insurance, coin availability, customer service, sign-up process. KYC is a pain for some people in some exchanges, derivatives, leverage, pro features, wallets, etc. And the results are in from all of these different players that you know. Binance and FTX came out on top, and they seem to be the strongest, the highest growing, most bells and whistles that come out there. But sometimes as well, the cons of some of them is, for example, FTX. Some people find it not beginner friendly. It's more like a professional trader's tool, and it's not popular with the younger generation. Also, Square performed the best amongst new and casual users. Just to put $20, $10, $100 into Bitcoin, Square did very well, but it has very limited features and a lot of other things. So the other way of looking at it too is a lot of people now in this day and age, you got to be worried about risk and what is the safest. Now, during our survey, the safest actually came out as Gemini with an average weighting of 7.23. Other ones that weren't as well known or kind of new to the market weren't really known for their security, even though there's nothing that actually said that the security was bad about these platforms. But again, when you're talking about risk averseness, people, again, this survey was done before all the FUD about Coinbase as well. PayPal is up there because it's been around. Kraken did well. Square, FTX, Binance. But really, I think if you deal with the biggest names, you shouldn't have a concern about security. And finally, the top ranking and the composite scores. And you can see that everybody is different, but depending on exactly what you want to focus on, there is no one size fits all. And this is why we built what we call BYOW, Build Your Own Weights Calculator. And using this, you can determine exactly the right exchanges for you based on what your parameters are. Oh, I want security, I want features, I want tight spreads, I want a really good wallet, etc., etc. I want zero transaction fees. And this will help you rank exactly what you're looking for. So again, the quick conclusion, Tunas on Toast, is FTX and Binance, and I primarily use FTX right now myself. So that is it. Hope that helps you as you go forward. Next question is from Konstantinos. What's your hedge for Tesla and why not Bitcoin? That is a good question. So when I always talk about having a hedge for an asset, whoops, I just dropped my thing. Oh, and the battery fell out. So sorry, this is crazy. When I talk about a hedge for an asset, I've never dropped this before. I imagine a competitor coming up from behind that's going to take over the position. And I do not see one for Tesla because there is no alternative. The old TINA, there is no Tesla stock. And even Dan Ives said that on TV this week. He said, I think it was on Fox News or CNBC as well. He said, Tesla owns the EV world and everyone else is paying rent. And I thought that was a very strong statement. I mean, I say Tesla's 7 years ahead of the competition. There's others that are coming, but they don't have the whole package. They don't have the colliding 4 S-curves. They don't have the moats. They don't have the manufacturing expertise. They don't have the margins. They don't have the FSD. So again, there is no hedge. But what I do is at certain times of the market, and in full disclosure, I've been pre-split, etc. I've been layering into Tesla, adding to my position, and it's become an outsized position. But again, when I look at all the other assets out there, I can't find anything with the growth and the lowest risk profile that Tesla actually has. And I look every single day. So this is what I do when Tesla gets toppy. I hedge a bit off the top every single time, but it's rare that happens. That happens 3, maybe 4 times a year where I do that. When it gets squeezed through a gamma squeeze, very overbought, then I go into a hedge position and cover it. And I do that with, again, that 3 to 4 time cadence a year. So that's my Tesla hedge. Next question from Guinea Pig. When is the best time in the 4-year cycle to allocate to alts? Do they reach their lowest point at the same time as Bitcoin, or should we wait until the Bitcoin dominance goes back up? Guinea Pig. So, you've heard me say this, is about probably the 4th or 5th time I said this. The 4 most dangerous words in investing are this time it's different. But, as I've been saying too, this time could be and most probably is different. I've been saying that a lot of this season, a lot of this bear market, because alts are behaving very differently. So before we jump into the alts and compare it to previous cycles, remember 98% of altcoins and the 18,000 cryptos out there, or 18,600 or 19,000, they're all garbage. It's probably actually 99%, but we'll just call it 98% to make sure we don't offend anybody. Okay, so just remember that going in. Very few will win. Just like in any other space, there isn't room for 18,000. There isn't room for 800. There's room for a tiny fraction. So also, when we look at altcoin season, this is where we are since mid-July. And typically, in a bear market, you see a lot of Bitcoin dominance, and Bitcoin does very well. That is the line you're seeing there. It tends to be kind of down during the bear market, but that's not the case here. We see now, since mid-July, the altcoins have shot out of the gate to more than 95%. Let's look at the performance of altcoins over the last 90 days compared to Bitcoin. This is stunning. These are the top 50 cryptos and their performance over the last 90 days. And Bitcoin is third last. They have performances up 3.5%. And you have names like Cosmos up a whopping 152% just over the last 90 days. Ethereum up 47, I think 50% approximately. Matic 113%. So everything is crushing Bitcoin. All right. So as I was saying for quite a long time, you'd think with all that's happened, people would be much more risk averse and conservative. They're not. They're DJing into alts like crazy. The other important thing to remember is as well, this time is different because the layer ones of 2017 versus the layer ones of 2022 are very, very different. This time is different. They're far more mature. They process a lot more DeFi. There's more use cases like NFTs. There's far more users. There's far more transactions. There's far more wealth transfer. There's far more wallets. There's far more adoption. It is completely different. So in summary, to your question, this time is different. Look at Bitcoin dominance as another one. Bitcoin dominance has been bouncing off all-time lows in a bear market, which is not where it normally is. Okay, bear market dominance is in the toilet, as I call it now, and alts are front-running Bitcoin. And as I say, I won't mention it again, but the L1s have a radically different value proposition. And I've been accumulating my alt hard since summer. So if anybody can guess what that is. Anywho, next question is from The Purge. It's funny. I tweeted about the purge, I think, the other day. Anyhow, UK government is going to add to their debt by borrowing 100 billion to pay energy companies for 2 years in order to freeze prices to the public. As energy is a large contribution to inflation in the UK, yes, this will have the side effect of reducing the visible inflation, which the ruling party will try to sell as a political win. Do you agree? Well, everywhere I look right now, I see this kind of veiled stimulus happening, veiled money printing. In the US, you have the IRA, which is the Inflation Reduction Act, and they also have the SLF, the Student Loan Forgiveness Act. Those two combined, $1 trillion. $1 trillion is a lot of money. Now we have the UK, £100 billion, which is $125 billion approximately, coming out to help people as a stimulus program, a subsidy, a form to help people get through. So for those who aren't familiar with the energy subsidy summary, it's a cap freeze on energy costs per family or household, £2,500 per year until 2024. This will cost $100 billion in full, $50 billion in the next 12 months. And the most important thing is they say it'll cut poverty by 26%. So we'll dig a bit into the kind of inflation element of it in a minute, but let's go through some other macro numbers. So the energy price cap, here they are per quarter is what they expect it to be. You know, if the family is spending £4,650 per year for energy, heat, gas, whatever, that'll be capped at $2,500, and the rest will come out of that $50 billion fund. So the real thing is, obviously, this costs money. So $50 billion, $100 billion, again, more subsidies. This will increase the deficit, as I covered in my central bank video. You can see here the UK collects about 880 billion in taxes, spends about 1.111. Interesting number. Add another 50 to 100 billion on top of that. And of course, the tax revenue is going to be down because capital gains are going to be down. And that's a big source of British taxes and US taxes as we go forward. So let's examine for a second the inflation aspect of this. So I pulled up the typical UK household budget. And this is from April 2019 to March 2020, the most current numbers I could find. And you can see there utilities make up about £151, and that includes water, which is not impacted by this. It's just gas and electric. So I assume the amount that people typically spend per month is £100, and that is approximately exactly 5% of a typical household budget every month compared to all the other elements. So they are helping people with 5% of their budget. That's not going to do a whole heck of a lot with inflation. So my summary very quickly from this, and again, I do not live in the UK, never have. So, you know, the situation on the ground may be different. I'm just looking at numbers that are available on the internet. Gas and electric make up 5% of budget. Delta is now 1.7 times higher, which means it could be a max 8.75% of budget. But with the cap, that could also come down a little bit. Yes, it will increase the deficit, which will increase money printing, which will ultimately increase inflation again. And the impact, this is the big question you asked, the impact on the inflation stats, I believe, will be negligible because there's so much other stuff that costs money. You know, increasing mortgage rates, increasing food, increasing transportation costs, increasing healthcare bills, etc., etc. They are where the money will think. Now, the piece that they say, and this is from the government website, the reform produces net cost of minus 50 billion and poverty falls 26%. Who are they kidding? But in terms of poverty, though, I do want everybody to keep an eye on the elderly or senior citizens, because this is another piece I did pull from that public website. The deep poverty impact by age group, the senior citizens are hurt most by this increase in gas and electric costs. So everybody, help out the senior citizens, make sure they are warm during this winter as things get pretty bad out there. But hopefully the government can help them. But reducing poverty by 26%, I do not think so. Don't see it happening. But again, they're pandering to get approval to spend all this money. And we'll talk more about money spending in a minute. Next question is from Git. Can you share why you think we won't go into stagflation and why this won't be a 2-year recession? Some very well respected people are saying this from Git. So let's talk about what I said and when I said it. So first of all, 15 months ago, I shared a slide in the weekend Q&A of this exact slide. This was in July 2021. And I said, when you get a 2.5% raise, but inflation is 15%. Well, I was wrong about inflation. It's more like the true inflation is probably more like 16 or 18%, but it was pretty close for a year ago. So that's the first thing I did share. Second thing, I did a POV on inflation and deflation. So in July 2021, I said big inflation is coming. Stagflation will hit after, which is typically 12 to 18 months from summer 2021. And after that will be deflation because of demand destruction. That's kind of where we are. So I do expect a little bit of stagflation to hit. That is high inflation, low growth. We're actually technically in stagflation now. Some people now call it dragflation, but the theoretical term is stagflation. And after that comes deflation. All right. When all this happens, I'm not sure, but I think 2023 for sure there will be deflation. Now, the causes of deflation, I knocked out a couple. Obviously, global recession, absolute decline in confidence. They are both big check marks right now, which is demand destruction. We are there, ladies and gentlemen. Just look at the housing market. And then you have lower cost of production because you're going to have lower oil prices coming down, improved technology. Wait till you see AI day from Tesla. And you've got appreciation, falling import prices because of things like the stronger dollar. Boom, all of this drives deflation. And that's why many people believe deflation is next. So with that, I think the kind of conclusion is like war, the US will print its way out of recession. So if we are in a recession, I do believe it'll be short-lived because of the following. The government owns the money printer. They'll print more dollars. They are already putting programs in like the IRA and the SLF. They will cut interest rates back to near zero again when required to, again, kickstart the economy. And this is the debt world we live in. And a beautiful quote to everybody. Shout out to Jeff Booth. It takes money to make money, and a lot of it. So governments are the worst capital allocators on earth. Per Jeff Booth, it took 185 trillion of debt to produce 46 trillion of GDP growth over the last 20 years. Would you give your money to the government to invest on your behalf? No, not a good idea. So that is the real story of where we're going. So net, we go back to the roller coaster, inflation, stagflation, deflation. And then when things get really bad, money printing, which is already happening, and then rates will go back down. And that's it. When all this happens, I do believe we'll have some deflation in 2023. So thanks for the question, Git. Next question is from Dimitri. What is the chance of the US defaulting on its debt? And what would it look like? And how would it affect an average person? Interesting question. So the chance of the US defaulting on its debt is probably zero, we believe, because the US, again, like the previous question, it owns the money printer and can always print the debt away. They can devalue bonds, manipulating the interest rate and paying you back in inflated money. So, or debased money, I should say. And however, the consequence of this kind of inflation, hyperinflation, whatever you want to call it, is terrible for the average person. The price of everything is going to increase constantly as we go forward. It has done over history. You know, people talk about 2% being the norm, but the average is 5% or more. In fact, if you look at real numbers and money printing and debasement, it's probably more like 14%. So it's like, this is kind of where we are. So keeping up with it is a problem. I believe there will be no default, but I do believe there will be some type of reset. A lot of people talk about the reset and when that'll happen. And that's why a lot of governments are putting into place central bank digital currencies to enforce you to do things like if you get a paycheck, they can make you spend it immediately to stimulate the economy. You won't be allowed to save depending on how they play with their CBDC buttons to control exactly how you act. Or you might get a different interest rate depending on who you are. Or even a negative one. If you sit on cash in your account, like poor people in Europe, they were charged to deposit their money. So that's where we are. Now, stepping back, I also see two alternatives regarding your question, Dimitri. One, alternative A, and a lot of people do believe this. If you do believe the Fed and their heavy jawboning and believe that the government is willing to spin us into what I call financial Armageddon, i.e. 1929, then short the hell out of the S&P 500. But I do believe smarter heads will prevail. What I believe is alternative B. I think there's a zero chance that the US will default on its debt. The money printing will continue. For example, the programs that we see right now, IRA, SLF, and more goodies coming. And debt is increasing and will always increase. Just go to the debtclock.org, watch the debt go up, watch the GDP go down, watch the unfunded commitments increase. It's as clear as day. Again, it's the debt world in which we live in today. So Hope that answers your question. Next question is from John McLovely and Crypto Shiro. So you guys are not worried about all the scary stuff. So there are rumblings in the news about looming threat of China invading Taiwan and subsequent World War III. What can we do to protect our portfolios with this ongoing threat? Should we hedge? If so, what? Cash, defense stocks, or something else? So again, we've had this question a few times before in different versions, and we believe the chance of war, the good news is very, 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 very small. But if there is World War III, it will be a nuclear war. And the only assets that make sense to hold in such a scenario is Bitcoin, some people say gold or silver coins, food, and security. If it is a nuclear war, your priorities will not be managing your portfolio. It'll be food, water, shelter, protecting yourself and your family. And that's where we are. But the good news, I don't want to dwell too bad on the negative. I think, again, I do trust in humanity and smarter heads will prevail. And the overall risk is negligible because China is not going to invade Taiwan and trigger World War III. The US is committed to defend Taiwan. And also on China's side, there isn't any buildup of hundreds of thousands of troops, ships, and amphibious landing crafts getting ready to cross the strait, unlike what happened in Russia and Ukraine. Now, China also imports about 500 million metric tons of crude, making up 70% of its total consumption, which can easily be cut off by the Middle East Sea and the waterways around Taiwan, meaning invading Taiwan will be completely self-destructive, as it would completely cut off oil, without which it would not be able to wage war. And finally, with both US and China being nuclear powers, a hot war would inevitably lead to massive human and environmental destruction. So again, despite the saber rattling, we believe chances are very remote. I did read a paper, though, about China building up kind of military medical supplies and uniforms and stuff like that. But who knows? Maybe again, I think it's highly unlikely. But if it does happen, we have bigger things to worry about than our portfolios. Now, this one is an interesting one. Scranny Wanch. It's probably one of the weirdest questions I've ever got. What car buying strategy do you recommend if you need to buy a new car at the precipice of the EV revolution, but current options are out of your price range? What do you envisage a second-hand ICE vehicle price depreciation over the next decade? This is an interesting, great question, but you should approach this like every other big, heavy purchase. I covered a piece yesterday, I think, about consumer confidence around heavy purchases. You don't want to be holding on to a wasting asset. Buy assets that appreciate. Like I bought nearly 4 years ago a Tesla X for $110,000. Today, the Kelly Blue Book value is $95,000. So it's depreciated $15,000 in 4 years. Yes, it was an expensive car, but it was a car that I believed would be valuable over time. And here we are. And it's proven right. So as we go into this new revolution, you don't want to be holding a nice vehicle, especially with California saying they're going to ban all ICE vehicles by the year 2035. What you do want to do is do what I used to do for a long time, is lease. And people say, oh, lease, crazy expensive. But no, let me explain how you can hack a good lease. First of all, if you can negotiate really low interest rates, if you got good credit, you can do that. Even if the car leasing rates are like 6.99%, you can still get a very low rate, like less than 2% or 1.5%. Remember, car companies tend to have big financing arms, so they can be very creative around their interest rates when they have incentives to offload vehicles. Second, lease a great deal. Write it off against a business if you can. And recessions are great to score great deals. You can go in hard and negotiate. We are also at the time when the car companies, the dealerships, need to offload their 2022 inventory because they've got the 2023 cars coming in. And this is a perfect time to buy. So let me tell you a fun story of what I did. And I did this for probably 20 years, like clockwork. So I built lease models in the 90s. I understood how leases are priced, and I negotiated residual value and interest rates with every car dealer. And I was leasing cars with close to 0% interest and 74, 72%, so now 71% return value for 3 years. So to put that in perspective, if you're leasing a $100,000 car and your residual return value is 74%, you're only taking a $26,000 amortization hit over that 3-year period. And then you fund the car with the interest rate close to zero. So that's basically what you pay. And if one dealer said no, I would walk to the next. And for me, it was a sport. So let's walk through some of the math of how that works. So this is an actual case. The last car I leased was an M6 BMW. It's the X6M package. It was about $89,000. I put $1,000 down, 36-month lease. The car value at the end of the loan was $59,200 because I negotiated the amortization under 10% per year. And the interest rate was like 1%. And there's the math of how you do it. So what I would recommend, the beauty of leasing is as long as you don't crash or damage it or whatever, you can just hand it back after the 3-year period and you have a little monthly amount that you can fund and pay. That's what I recommend for a nice vehicle. And you can get great deals. There are some car companies that have leases at $199 a month now as well. So hope that helps. Hacking car lease buying. I did it for over 2 decades. Next question from Kemu. Which podcast do you listen to, if any? So I actually, I don't listen to any. If there was one with lots of KPM, knowledge per minute and numbers, I would. But this is one of the reasons I built this channel too. And I have little time, so I need to absorb as much as possible. And podcasts tend to ramble, and I just don't have time for that. So I actually don't. But I prefer to read as much as I can. Scan a lot of articles, and I can read much faster than I can listen. But sometimes if I'm doing things in the yard or whatever, I do have certain YouTube news stuff running in the background. I enjoy things like, for entertainment, Lex Friedman and his podcasts, and anything from the Jeff Booths of the world, etc. So with that, everybody, that was a long one, but we got through it pretty fast. Thank you for your super chats and stickers and stuff. We have 3 new little family members. We have Maggie, a peregrine falcon that we sponsored this week with one eye after accidentally flying into a building. Hudson, Gerfalcons typically breed in Hudson Bay, but Hudson was born in captivity. And we have Verlon, an American kestrel whose nesting tree was cut down and was unable to return to the wild. So thank you so much, everybody. And I hope you enjoy the KPM. Hit the like and subscribe if you haven't already. I think, actually, I checked the people always talk about their subscribers. I think 68% of the people that watch my videos have subscribed. 32% are not. So subscribe if you haven't. I promise not to waste your time, and you'll learn a lot in this channel. So let me see. I should have some questions in from the audience. I do. And a big thank you to the moderators in the chat. You guys rock. There's Jabba. Thank you so much. Smash the like. Thank you on the behalf of all the loyal family members. Thank you so much, sir. You're awesome. Hope everything is good over there on the other side of the pond. One Bridham. If Bitcoin goes to 158K by 2024, what would your estimate of Sol be at the same time frame? So I don't benchmark Sol to, or peg it to Bitcoin price action. I peg it to Ethereum. And I still firmly believe that it'll go to 20% of the Ethereum market cap. But let me see if I can pull the actual pricing models for, because I do have a relationship between these targets. Hang on. Got to dig it up. All right. Oh, sorry about that. I'm trying to get it. All right. Here we go. So if that's so hard to say. I can't anchor. I don't want to give you the wrong answer, but I promise to get it to you one Bridham next week. Okay. I don't want to rush this, and it's more complex to. I know where the Sol price probably will go based on where I believe the ETH price will go and over that 2024 timeframe. But I have to tie it back and compare ETH to Bitcoin dominance of where I believe that'll be, and then tie that back into the ETH pricing, and then tie that back into the Sol pricing. So I'm not going to be able to do that on fly for you right here, but I promise you I will answer that next week. So stay tuned for that. I just don't want to give you a wrong estimate. I'd rather be much more precise with my 3 different scenarios. AG, are you worried that a successful Vassal fork will blow Solana out of the water long term? Absolutely not. I am very, very confident. So we'll see. I just watched the adoption of the chains, and that gives me a lot of comfort. And I don't believe Vassal hard fork will change the adoption of the chains, but we'll see. Now I did say many times, and I have actually a wager on this for a number of Bitcoin that, last November 2021, Charles and the team said Vassal hard fork would bring about 1 million TPS. And I have money on the line if I will lose money, Bitcoin, if Cardano makes 1 million TPS in November 2022. So I got about 60 days left. So if Vassal does make that happen, I lose money. But I put my money where my mouth is anyway. For me, it's sport. So that's where we are, AG. And I look forward to it. And again, there's room for a lot of chains, and I love old chains. I only invest in very few. That's just me. I like to go real deep, and I can't. There's simply not enough time in the world to go real deep on 20 or 60 different assets. So JKS, what price are you adding to your Tesla bag? So that pre-split was the kind of 650, 750 zone where I was adding. So right now that would be the $250 mark. Would be the high end of that. And now Tesla, I think, is at 299. Had a big run on Friday, so I don't add at this level. And in fact, one of the issues I have is my Tesla bag. Part of my equities is, 82 to 85% of all my equities, which is too much of a heavy load. But again, I can't find others. And also, it's outstripped the performance of other assets during this downturn. That's why things are out of whack. And the same thing with my crypto too. So I've been adding certain crypto, but once things do rebound, I expect to have to reweight and redistribute things. So for example, my goal always since last year was to equate my Sol and ETH bags to being the same size. I'm almost there. Not quite there, but almost there. So that's kind of what I'm doing. Mths, with Saylor's announcements, he's buying another $500 million of Bitcoin. What do you think it will be all at one time? And do you have any effect on price? And will likely be done OTC. So there's a couple of factors there. One, he did file to issue shares to buy Bitcoin, and in full disclosure as well, I went into a short position on MicroStrategy. Well, I hedged my long. I have long positions, so I sold calls against it. Kind of a hedge, but I'm playing the other side. We'll see where it goes. This dilution is quite substantial based on the market cap, so I do believe that'll have an impact on the share price. But as I always say, one of the things that's interesting about MicroStrategy is their financial jujitsu. How they have all sorts of tools at their fingertips to accumulate Bitcoin. And now that he's no longer the CEO of the company, he can focus just on accumulation as the chairman. And so with that, I think it'll be interesting. I know he is desperate to aggregate and accumulate as much Bitcoin as he can at 20,000, bring down his overall cost prices. Cost price, I think his cost base is about $30,530. So if he could buy $500 million at 20 grand, that would be great. And that is, I think, the impact on price as well. That could take us way north of $25,000 Bitcoin, given how little supply there is on the exchanges. And it will be done OTC with their partners. So it'll be exciting to watch, but it's a double-edged sword, diluting the MicroStrategy price and inflating the Bitcoin price, which will ultimately inflate the MicroStrategy price. So it all works out. And that's why I love the tools that they do. And I love his commitment. And people underestimate Michael Saylor, but he is an extremely intelligent man. So fascinating. Juju John, Bitcoin is plan B, crypto is plan C. When are we having a day in the life of James video? Thank you for the life-changing content. Yeah, I think it was a few weeks ago, I shared my typical agenda, and it's very dull. 7 days a week, same thing. Up early, work, eat, sleep. Up early, work, eat, sleep. So it's not very exciting, but it's the world we live in today, and I do enjoy it. But who knows? Maybe we can do something for you, Juju. Thank you so much. Charles Kincannon. What would you say? Would you say that macro had a veto on the normal numbers used to analyze a trade? Macro had a veto. I'm not sure I really understand. I'll read that again. Would you say that macro had a veto on the normal numbers used to analyze a trade? Oh yeah, like as in the macro backdrop has overarching pressure on stock prices. I agree, with the exception of a couple of stocks that don't care about the macro. Companies that have no debt, companies that don't have to sell their products because there's a 11-month backlog, companies that have high margins. There's a reason why I'm in so heavy in Tesla. The macro doesn't matter to them. It did matter, when things like zero COVID policies in China shut down their factories. It matters when they can't get the materials they need to make cars. Yes, it does. But if they can't sort it out, nobody else can. So from that perspective, yes, it does have a huge impact on numbers. And also, when people look at the macro now and they're factoring in now, it's like, maybe we're in a recession. If we're in a recession, what impact will that have on earnings of companies? Taking the E on the price to earnings ratio down. And a lot of people are very worried about that. That's why a lot of people are talking about the market crashing, but especially those that are heavily short the S&P 500, and they get on TV and they try to talk it down, saying, "Whoa, the S&P 500 is going to fall 20% on the 15th of October, 2022." We'll see. But yeah, that type of, again, more jawboning. This goes into, I guess, what talking heads try and influence and talk their book and everything out there. So yeah, I would say macro does have a veto on normal numbers, especially when people read too much into the macro and get very afraid by it. And I've never seen, as long as I can remember, so much negative sentiment. And as Warren Buffett says, be greedy when others are fearful. Wise words. Ahmed, do you still think one Bitcoin will be life-changing? Yes, I do think it will, especially, if Bitcoin stands the test of time. I always say there's always a 1% chance, said also 1,000 times, that Bitcoin could go to zero. 99% chance it won't, and it'll do very well, just by sheer brand value and scarcity and adoption. And if things continue the way they are, yeah, it'll be definitely very life-changing. So it's hard to put into perspective. I started the whole coiner thing when I started the channel. It's 20 months ago at this stage. And I felt mathematically having that little piece, like I was telling people back in 2018 and other times, I said, if you got 3 kids, buy 3 Bitcoin, put them away, 1 per child. And that was always my thing. And I brought that to this channel as well. But I do believe it'll be very life-changing. Don't have all your eggs in the one basket. Have some other stuff too. I also believe layer 1s and DeFi will be life-changing as well. Just right now, it's hard to see it because we're in such a bear market. But remember, not too long ago, Bitcoin shot from 20 to 67 in a very short window of time. And it can do that again and a whole lot more. Plus, we have the halving coming up in 2024, which I believe will be front run in 2023. So good times ahead. Again, I'm excited. I just urge everybody to stay healthy so you can enjoy these good times in the future. More GK, in honor of our mods who are here every day helping out. Thank you so much. You guys are all amazing. I really appreciate you all. And remember, Q4 is typically very good, and I'm excited by that too. And thank you, Artem, Dog1, Gooby, Jeff Hammer, P. St. Jude Needs Us, and Kiwi Robin. So the voice is a little gone today because there is smoke in the air. Thanks, California. Anyway, stay safe, everybody. Hope you learned something, and don't worry about what you can't control, and just live life well. Thanks all.